I want to welcome you back. I'm Harvey Blankfeld, and you're listening to Las Vegas Real Estate Now on AM 720 KDWN. We're here every Saturday at 11 a.m., and with us in studio we have Steve Shauer. He's with New American Funding, and he's been a local lender here in Southern Nevada for 21 years. He's also got a bachelor's degree in finance and a master's in business. Steve, welcome.
Hello. Hi. Thanks for having me again. Appreciate it.
Always like having you back, Steve, because you bring us some good education for our listeners. I know they enjoy that. Today, we want to talk about some programs that they might not be aware of. These are some new things that we've heard of recently. And I understand that you guys can do a conventional loan with only 3% down. Is that right?
Correct. Brand new out, actually. Brand new this weekend.
Brand new.
Do I have to walk on water to get that?
Do not.
Okay.
No, not at all.
And because she will, by the way. I'm just saying, she'll walk on water if she has to.
That's a misconception that I see a lot of people thinking that the conventional loans up to $417,000 on the loan amount has to put 20% down payment.
Right.
When this brand new one out is 3% down payment. So it's very good.
That's fantastic. And so, normal qualifying procedures. Is there anything else that we need to know about? Do I need the extra points involved? Or
no, not at all. We haven't gotten the interest rates yet out on that. It might be slightly higher.
I would imagine it is if you're putting less money down.
Potentially. However, the credit score criteria should be the same as a traditional 5% down payment. Everything runs through a desktop underwriting system and automated underwriting, so we have to rely on that to give us the answers of whether or not it would go.
So what that means is you plug the data into a computer system and the system tells you, when you talk about desktop underwriting, what does that mean? You put the info in and what happens?
It tells us yes or no if we can do that. It gives us a refer type of scenario or an approved scenario.
Okay, and if it says no, can you manually underwrite a loan?
Absolutely.
Okay.
Absolutely. Manual underwrite is still out. It is a little tougher. There's a little more guidelines on manual underwrite, but it is there as well. Years ago, we were relying just on the automated underwriting system. We call that an AUS, or automated underwriting system. But remember, the automated underwriting is as good as the input that we put into it. So I can put somebody's income at X amount of dollars and they easily qualify.
Right.
However, we have to make sure that our input is going in good on that, get a good answer, and then let the underwriter just validate the information we put in.
Right. You got to verify they're making that much money.
Correct.
Right, so do people say they make more than they do?
Traditionally, we're telling them how much they, quite honestly. We're looking at their pay stubs, their bank statements, their tax returns, and using that for income.
So you're not just asking them. You're
We're validating.
Right.
So there is a difference between a pre-approval and a pre-qualification.
Correct. We've taken it one step further on the pre-approvals, where we're actually running the desktop underwriting, the automated system, actually getting them approved, looking at all their information before they go out and shop. One step a little further that we like to do to make sure that nothing comes up. Just in case. You just want to make sure of everything so they don't fall in love with that house all of a sudden we say, oh, by the way, there's a problem. We want to make sure of that.
The good news for this 3% down program is because FHA's limits is only, right now they're 287.5 for Clark County.
Correct.
But if you go conventional, you go up to 417.
The maximum loan amount, 417. Yeah. So that means you could do a purchase price of what, about 425 for 430, right, and put the 3% down payment.
Okay, I've got to ask you about the mortgage insurance, because I know you have to have mortgage insurance on a conventional loan if you have less than 20% down. Is it difficult to get the mortgage insurance?
Not at all. Not at all. The conventional actually has come a long way on the mortgage insurance. That's typically called private mortgage insurance. The one good news about the conventional, whether it's 3%, 5%, whatever the down payment is on conventional, you can remove that mortgage insurance down the road. Whereas the FHA, you cannot remove that mortgage insurance. So it's a great option for everybody on there. That once they gain equity, once they do some improvements to the house or anything like that, you can petition to get rid of that mortgage insurance.
In case you just joined us, you're listening to News Talk 720, KDWN. This is Las Vegas Real Estate Now, and we're here every Saturday at 11 a.m. I'm your host, Harvey Blankfeld, along with my partner, Shelley Brown. And with us in studio, we have Steve Shauer from New American Funding, and we've been talking about this new program where you can do 3% down conventional. I know that, and I love the fact that you're going over the fact that you still have to qualify. This is not one of those deals where, okay, here we go again, where we're just giving money away and that
Correct.
kind of thing. You still have to be well qualified. But one of the key takeaways that I just got, is I list a property, and if I have a listing out there, or I'm a seller, and I'm listed at $350, this is really good news for me.
Correct.
Because now you've just opened up a loan program where the buyer doesn't have to come in with 10 or 15 or 20% down, and so that opens up a whole new book of buyers for us in that range. Because up till now, you weren't, unless you were VA, you weren't going to be able to do that.
Correct. The minimum down and this was taken away. The 3% down, Fannie Mae and Freddie Mac took this away a few years ago, and it's added it back for a risk factor because again, they're getting less risky, and we're qualifying more of them.
Right.
So again, still qualifying everybody, but it's a great option for people.
Yeah, and like Shelley said, you're going to pay mortgage insurance on these programs, and it's still pretty well protected. There's also, and we've talked about this before, but it's a great program too, is the FHA Back to Work program.
So the Back to Work is a great option. And again, FHA has that 287 loan amount, but everybody thinks you have to wait a long time since a foreclosure or bankruptcy, and the Back to Work will allow you to wait 1 year since the foreclosure or the bankruptcy, as long as there is a reduction in your income. In other words, the reason for the bankruptcy or the short sale or the foreclosure was due to a
real
an
hardship.
income.
Not a dramatic hardship, but some hardship.
Some hardship, a loss of income.
Right.
So you lost your job, you were a teacher, and you got rehired again at the school district or something. That would work.
Correct.
Okay.
And that allow you to wait 1 year since the date. That's a great option to do. And those
huge.
loans as well, when we talked about pre-approval, those loans we actually pre-approve them as well. We actually go through underwriting on those loans as well and make sure that they can do that, because they're a little, we have to make sure the event, and we track all the event and everything like that. So it's a great option.
Pre-approved, desktop underwritten. These are the things that, as a listing agent, I love seeing. I'm going to tell you that if you're bringing an offer to me when I have a property listed, and you're bringing that kind of documentation with your buyer, you're strong. You come in a lot stronger than if somebody who didn't have those things. If just a pre-qual as opposed to a pre-approval. These are all things that are very important for buyers to know.
Unless they're paying cash for the house, I truly believe that someone should talk to the lender first, quite honestly, just to make sure. Let's go over the payments. Let's make sure you can qualify. Let's make sure you can look at that $250,000, $300,000 house and not $100,000 or whatever. Go through everything and make sure the payments are there with you as well. And almost financially plan this. Go into the whole planning stage of it.
As you're listening to Steve speak about these things, I'm sure you're getting the same feeling that we already know. Steve's a smart guy. He knows how to do loans. He knows how to do mortgages. He's been doing them for more than 21 years now. If you're interested in getting in touch with Steve, I'd love for you to reach out to me, and I'll put you guys in touch. You can text me at 702-203-1165. Again, that's 702-203-1165. Go ahead and text me the word loan, or call me. Call me off air, and I'll certainly put you in touch with Steve and get you guys together, and he can talk to you about it. Anyway, you charge about, what, $8,000 to have a consult, Steve? Is that about right?
No, exactly. It's free.
Oh, it's free. Okay, good.
Free consultation.
Yes. Just for our listeners, though.
Yes. Yes, correct.
No, so do that. Reach out to me and take advantage of this program. If you've been out there, maybe you're thinking about moving up. Maybe you got a home you've been living in for a while. It's getting a little small. You're thinking about moving up, but you didn't think you had enough money. You just found out you got enough money because you only need 3% down now. So you can move up to that $400,000 house.
Correct.
This is really good news.
It's a great option.
It's really good news. So there's also this time of year, we're at the second week in December now, and there's a few people out there who are thinking, well, gee, let me sneak one in before the end of the year. Can we still do that?
We actually can. We're getting to that point where it's close, but since we're a direct lender, we underwrite ourselves. We have underwriters here in town. We can do them fairly fast, and we will get it done by the end of the year. We're right on that border, so if you're going to buy, now's the time right now to do that, and we can close it by the end of the year.
Yeah, I know that you guys have what you call a 14-day close guarantee.
We do.
Under the right circumstances, and so that means, guys, you got to, I think, don't plan on closing the 31st. Don't plan on that.
Yeah, and we got, how many working days are left in the month because of the holidays?
Correct. But we would love the opportunity to try that and get that done for everybody.
Outstanding. And then, so one of the reasons you guys are quick, as you said, because you do a lot of things in the house. But the good idea, like you said, is to get everything done ahead of time before you get yourself into contract, because now you know your budget. How many times, Shelley, somebody called you and said, "Yeah, I want to buy a house for $200,000," but they have no idea what that really means to them.
Yeah, they don't know what it means, and I will tell you that Steve just recently did a buyer for me, got them all fully qualified, approved, and then we wrote the contract.
I want to talk more about that, so can you stick around for a little while, Steve?
Absolutely, yes.
Hey, guys, stick around. We're going to take a quick break, and we're going to bring Steve back for another segment. We'll be back in just a moment.